but a lot of the headlines right now are connected to what's going on with that hedge fund that got into some trouble. Julia LaRoche is going to join us now to help us understand what is at stake here with the, is it pronounced Archegos? I'm sure I'm not pronouncing it correctly. Archegos. But the first thing that came to my mind when hearing about this, and everyone saying this is not a structural issue, was the word contagion. But it seems like nobody else seems to be worried about that. What have you been able to find out?
Well, I mean, I've been on the phone with a lot of folks in the hedge fund space, and so I'd say like the reaction's a little mixed at this time, and probably, Adam, it's just a little too early to tell if there is any contagion, as you put it. But just kind of give a review for folks. I mean, kind of everyone likes to focus on these big stories when you hear someone just losing a tremendous amount of money. So there's obviously a lot of interest in it and what it means. In Archegos, the hedge fund you're referencing, it's a family office fund run by Bill Wong. Bill Wong, he worked at Tiger Management, which is the hedge fund had been run by Julian Robertson back before it converted to a family office. And then he went on to run the Tiger Asia Tiger Cub hedge fund, which ultimately had to return capital to outside investors after some insider trading back in 2012. But the interest here with Mr. Wong is that this fund was forced to sell, $20 billion worth of shares last Friday. That's according to Bloomberg in Viacom, CBS, and Discovery. And you've seen those shares just plummet in the last week. So you had Morgan Stanley that sold $13 billion worth of the stocks, Goldman Sachs another $6.6 billion, and you've had a number of banks, the prime brokerages from different banks, come out and talk about significant losses, specifically Nomura and Credit Suisse coming out this morning about significant losses that they face here. But I guess kind of the big issue is around disclosure. From what I understand, this was done through swaps. So it gave them a large position on these stocks, yet folks didn't realize that Mr. Wong was even a shareholder because he used swaps. So it was not known, it was not disclosed. Typically, when you think of a hedge fund, they have to disclose ownership in a stock of over 5% if they're building a position, or they have to disclose their equity holdings 45 days after the end of each quarter here in the US. But perhaps because this is a family office hedge fund, there are questions around the disclosure, but also really the use of swaps. In other words, the use of leverage, a lot of leverage here. So kind of the conversations I've had with folks is, who else is kind of levered up, or how much leverage is there in the system? That's been kind of one of the bigger takeaways I've had in my conversations. Adam?
Yeah, Julia, just jumping in here and going off of that, the transparency, the disclosure aspect of all this, because like you were saying, Archegos didn't need to report it because it is run as a family office. Is this something that you think that will likely be looked at now as this just draws more and more attention from regulators, you would think?
Well, yeah, you have seen, Bloomberg News was also reporting that the Securities and Exchange Commission is monitoring the situation. We have a new SEC chair with the new administration. We have Gary Gensler at the helm at the SEC. So you have to kind of imagine, Shauna, the disclosure issue. I think, I don't want to speculate too much here, but I mean, you've often thought about, transparency. People like transparency. And clearly there was not transparency here because of the swaps that were used that gave Mr. Wong positions that would have made him effectively the largest shareholder in these stocks. So I think it's maybe safe to say from my conversations I've had with folks on the buy side that you expect maybe, hopefully, and I guess in their view, some sort of changes around the disclosure, and also what family office is. I mentioned this was a family office. What they have to disclose. And I was doing a little research on that back when Dodd-Frank passed and kind of the exemption for family offices. I don't know, it was quite a bit to read, but from what I understand is if you are a single family or just one client or within that, you don't have to disclose as much. But there are, obviously this was a pretty big family office. I think the report suggested there was about 10 billion in assets under management at this fund. So maybe they have to revisit the size of family offices. Definitely, what are you going to do about disclosure around using swaps, the size of the positions, those sorts of things. So I would think it's safe to say this story is not over. We're going to learn a lot more in the coming days, weeks, months, and possibly maybe see some disclosure rules change.
I think we certainly will see a lot more attention on this. All right, Julia LaRoche, thanks so much for breaking all that down.